Hello and welcome to our March 2016 edition of Snapshot. My name is Brad Teal and this is our March update, and there have been a few months since Christmas that have seen the market pick up reasonably well, and although values haven't changed, which might be a very good thing, we've seen the CoreLogic figures show us some really interesting facts, and one of them is that in the last 10 years Melbourne is the only capital city to have actually doubled in values. Over recent times, Sydney has shown a slight decline and is the only capital city that hasn't shown any growth over the last month. We've seen 75% clearance rates on auction results, so really good sound figures there. And a recent article in The Age showed that the Australian Prudential Regulatory Authority has shown figures that indicate that the ballooning of mortgages since the property market in about 2009, 2010, after the global economic crisis occurred, we've seen the values of mortgages in Australia go from about $640 billion to $1.4 trillion. This has been reported and is really quite staggering amount of money, but it's all on the strength of this belief that we have in Australia of property is king, and getting into negative gearing, which is a really hot topic in politics, particularly at the moment. But $1.4 trillion is a lot of money, and no doubt they'll keep an eye on that. And it's also fueling the speculation, is there a property bubble? Well, I think in Australia, the circumstances, the strength of our banking system, it's all a little bit different to economic circumstances around the world, particularly in Europe. And with the increasing growth reported in America, I think we're going pretty well here in Australia. So we've seen interest rates stay on hold for the next month. The RBA reported that they're happy with things, and the growth in GDP, they're quite happy with all of that, and interest rates have remained on hold. Clearance rates have been at 75%, as I said, and what we've seen is really good numbers pick up in February after quite a slower month in January 2016. We've seen Essendon with good turnover of 30 sales, and days on market becomes crucial again now as the market has picked up more quality, high quality homes in the marketplace, and it attracts buyers. When there is more good quality stock, buyers get drawn into the marketplace, a little bit like bees to a honeypot. And so we've seen days on market come in significantly over the Christmas break. Essendon remains the highlight of the areas in which we have 10 offices, with 1,315,000 as the median price, and we've seen others push up $5,000 shy of the $1 million mark is Ascot Vale, and Avondale Heights $660, Brunswick $925, and Coburg $795. They're all these inner city suburbs are pushing up much higher to $800,000-900,000, and the $1 million mark won't only be Essendon shortly. There'll be many other suburbs around with that as well. So we've seen days on market be one of the things that I've talked about regularly, and what we have seen is that Brad Teal Real Estate across all offices continue to have days on market that are significantly better than industry average. And when you have such high market share as we do in many of our marketplaces, well, obviously that makes sense that we be ahead of the industry because we control so much of the marketplace. Residential rents are growing at their slowest pace in the last decade, according to CoreLogic RP data. The latest CoreLogic RP data rental review recorded just 0.2% growth in rents across the combined cities over January and February, but no growth at all much over the last 12 months. Over the last 12 months, in fact, Melbourne only grew at 2.1% rental growth, Canberra 1.8, Sydney 1.4 was the most modest of the rental growth. Vacancy rate is unchanged, sitting at around 3% across all stock. And in fact, that's another item to feature, that we are at 1.4% vacancy factor at Brad Teal Real Estate. And what that means is when people give a month's notice, we're having the property let before the tenant actually moves out, so that the minute they move out, we have the standard high-class assessment of the condition of the property is ready for the next person to move in, and no vacancy for our landlords, a win-win for everybody. So there's a snapshot of the market. We hope you've enjoyed listening to the facts and figures, and if any of our officers, any of our staff can be of assistance, do not hesitate to contact us at any time. So thank you for watching our March property update.